Money doesn't just come from one place. It drips, trickles, flows, and floods into our lives in different ways. Welcome to Drip Trickle Flow Flood, a podcast that explores the power of multiple income streams. We've got merch. That's right. Drip Trickle Flow Flood t-shirts are officially here, and they're as comfy as they are conversation starting. Grab yours at the link in our show notes. All right,
What's up?
Tony, how are you?
I'm great. How are you?
I'm doing good. It is super windy here today. We don't live that far apart. What do we live, like 15 minutes apart? And for some reason it's like Wizard of Oz over here.
You're
I'm
out
blown
towards
away.
you're out towards the flatlands. I'm up in the hills, and actually I do see a little wind now, but the way the mountains go here that are on either side of me, if it's north and south, I'll get the wind, but if it's east and west, we don't get any wind. So it looks like we're maybe getting a little out of the south, but
All that to say, let's hope that the Wi-Fi doesn't cut out. I think
yeah,
it'll be I think we'll be okay.
yeah, if your internet goes out, I'll sit here and talk to myself. I won't be recording, but
Exactly. Actually, it might still. I wonder if it will still go. It might. We'll see. We'll see how it goes, everybody. Don't worry. We have a good topic today that you came up with. And one of our most popular episodes, which we'll link back to in our show notes, is about renting versus owning. So we thought we'd do a bit of a follow-up to that in a different direction, which is renting to own. So a little bit different, but in the same wheelhouse. The pros and cons. So, Tony, I'm going to lean on you for this because we don't offer that as investors ourselves. So you are the pro here around that. So you'll have lots to share. But let's just start by maybe digging into what is this, first of all, like renting to own. So just break that down for anybody what does that mean? What is that? And then we can go into the pros and cons for a tenant and the pros and cons for an owner.
yeah, and I think this is an interesting topic right now, especially it is tough to get into a house that you want to purchase, and for a variety of reasons, need a large down payment, interest rates are still high, all of those things make it challenging to become a homeowner. Renting to own would be having a contract in place that you are a tenant, you are renting the house, the landlord still owns the home, they're paying the taxes, they're paying the insurance, they're doing all those things. There could be some arrangement where maybe that's involved in it. But you're paying a monthly rent, and then generally a portion of that rent would be maybe coming off the principal. And there might actually, at the time of lease signing, also be a purchase and sale that gets signed that would be executed at some future date. That price is likely already established, but maybe not. Maybe it's going to get an appraisal at the time of that execution. And so it's a creative way to get into a house, be able to start maybe paying down that principal. Maybe you can lock in your purchase price. And it can be good and we'll get into these pros and cons, but there are some advantages for the property owner as well. And one thing to think about is there's probably going to be some sort of down payment required also. Maybe not. There isn't always. The homeowner may want some sort of level of commitment beyond just the rent, and that may be a non-refundable deposit. So all those things are part of the negotiation process. But really, it's a creative way to be able to move into a rental house and maybe able to make it at least your house, if not maybe your forever house.
And I think this is as Tony said, this is a good way to deal and navigate with the current state of real estate. Also, I think one thing, and I'm just curious your take on this, Tony, is you don't see a lot of these opportunities out there. It's not like when you're going to rent a house, I'd say it's pretty few and far between that the listing for that rental would say this is a rent to own. Sometimes I've seen it, but not that often. So I think a lot of folks don't even consider that a possibility. How would you tackle that when people are out there maybe looking for a place to rent? Is that something that maybe they can bring up, would you say, to the owner up front? Or if they're seeking this, but there's not a lot of listings for it? I'm curious what your thoughts are on that.
Yeah, and I don't think it's out there that much. I think both from an investor standpoint, I don't think they think about it that often. And I think from a tenant standpoint, it isn't thought of that often. But I think it is something you can bring up. This is probably more of with your mom and pop type landlord, right?
Yeah.
But there are so many baby boomers right now they might be thinking about what's the future. Are they going to keep this investment property forever, or do they want to sell it? And having a tenant that may eventually buy it gives them that reassurance and that stability. And it might be something that people will be interested in. And we were just talking about this on the previous episode. You might get a no, or you might get a no, but they can't say yes if you don't ask. And I've been shot down, actually. When I was renting houses, and actually when I was renting a commercial property, I asked the landlords if I could do rent to own or get a right of first refusal, and I got shot down, and didn't change my world any, but it doesn't never hurts to ask. Yeah. So, there are a lot of pros and cons. And I think if we're thinking about this as an idea of a tenant maybe approaching a landlord saying, hey, would you do rent to own? You could present some of these pros for them of why maybe they would want to do it. A big thing for me, and why I've done this a few times as an investor. Actually, I have one currently in process on a commercial property. I have one that I actually bought the property. This person wanted to buy the property. They didn't have the ability to buy it. I bought it, did rent to own with them, and then they eventually purchased the property. And then I had another one where the person didn't buy the property. They decided it wasn't the right fit for them. And that is one of the pros for a tenant, is that they have the opportunity to say, more, the economy isn't doing what I want, or I don't like living here, or whatever the reason is. You don't get locked in and have to buy the house. You kind of get to test drive it.
Is there a penalty for that?
So how I generally structure mine is let's say rent would normally be, let's just say $1,000 a month, which nothing's $1,000 a month. But
I'm like,
let's just,
where is
for
this?
easy math, let's say
Yes.
$1,000 a month. So if they were just renting from me, it's $1,000 a month. They pay it. That's it. Maybe they say, okay, we're going to do a rent to own contract. Maybe we say, okay, rent's going to be $1,000 a month, and $100 a month is coming off the purchase price. And maybe we predetermine that purchase price. Or maybe we say rent's going to be $1,200 a month, and $300 a month is going to come off the purchase price. So the advantage for me as the owner is I'm getting a little better cash flow at the start, but all of that money is non-refundable. So if they end up not buying the house, they don't get that portion of the rent back. So I received more rent during that time period. One of the big advantages for the tenant is they're potentially paying down their loans, so their purchase price, so they're not just throwing away their rent, and they might be locking in a purchase price, which I know everybody thinks that housing only goes up in value because that's what's been happening for basically the last 50 years. So it's not happening everywhere now. Prices don't always go up.
Yeah.
And that gives the tenant the ability to not buy, but often it does go up, right? Historically, it does always go up. And so if you're able to lock in a purchase price at today's market value, and the house goes up by 5%, now you're buying that thing, and not only have you been paying down principal, you're going to have instant equity in that home. So there is some big advantage there. But let's pretend you're the tenant, and you call on a potential rental, and you say, okay, I'm interested in doing rent to own. Would you ever do that? And they go, oh no, why would I do that? And you say, well, maybe you'll get some higher income now. You're going to get a long-term, high-quality tenant because I'm going to treat this place like it's going to be my own. You're not going to get the turnover. And maybe there's a down payment component. And you say, if I walk away and I don't go through, you're going to keep my down payment. You get to keep more.
It's like a big benefit. So
that could be a
huge benefit.
A huge benefit. You already have your buyer here, so you don't need to list it. You're not going to have to pay a commission. So now you're going in saving that. You're also, there could be a tax advantage for people is if they're realizing some of that income now instead of realizing all of that income in 1 year, if that principal is being paid down. And obviously that's gonna vary from situation to situation. And then locking in the sale price. Now that could be a pro or a con, depending on what the market does.
Yeah.
But let's say it is a baby boomer and they're retiring or retired and they just want to be able to plan for the next 20 years or whatever it is. If they can do the math and say, I'm going to get this rent, maybe it's a 2-year contract, rent to own contract, and they say, I'm going to get this rent for this amount of time, then I'm going to sell it for this price, and they can just work backwards. And it might be just making their life simpler.
Mhm.
And so whether there's a financial advantage or not, there definitely could be for them, but it also might just be simplicity and predictability, which carries a lot of weight. An extra 5% in sale price might not be worth the trade-off for that stability.
Gotcha. And then, so then that was a lot of pros for the owner, but obviously there are some cons there. So let's walk through those.
Yeah, and if you're the tenant, you probably don't want to tell them this, but if you're the owner, um,
Yes.
if you sell it and they've been making their payments the whole time and they're getting that taken off the purchase price, then technically you're getting lower actual rent than what you would have over that time period. And this doesn't have to be, but often that rate is locked in. So maybe you're not getting those annual rent increases.
Is that something that some owners would build in though, just out of
They might, yeah,
curiosity? Okay.
absolutely. And especially right now, and being a landlord right now it's an interesting time in the fact that there's a lot of pieces going on to try to limit rents and doing these things while at the same time the cost of home ownership, whether it's your primary or a rental, has just gone through the roof. Taxes and insurance have shot up, maintenance and
Mhm.
repairs have shot up. So yeah, they may want to build in some sort of modest rent increase from one year to the next, just knowing that taxes and insurance are likely going up in that time period. Yeah, so you're still paying those potentially paying utilities, insurance and taxes. The tenant can opt out. That is a downside that you're doing this for stability. You mentally think, okay, I've got this place sold. I can tell you the person that didn't buy the one that I sold, I was pretty disappointed that it didn't happen. I had a partner in it. We tried really hard to make it happen. We actually gave them an extension to try to make it all come together. And in the
Mm.
end, they just decided it wasn't going to work out for them because there is that mental security that is nice. So that is a bit of a con if you get that let down. Being locked into a sale date and sale price can be a negative, both from if the market does go up, that could be a negative. Maybe you would have made more money. There also could be tax implications that if you don't have that flexibility because you've signed that purchase and sale a couple of years before, maybe you don't want to sell at that time. You don't have any control over what the tax rate may be at that time. As we know, that can change with the different election cycles. So that could be a factor. And then you're still responsible for the property. So leaks, if the pipes break, if whatever, that you're still on the hook for it. So that is a downside. We've been talking of a tenant, someone that's looking to rent, saying, hey, would you do rent to own on this? And I would say that could happen. But if it's someone's long-term investment plan, maybe they're not interested in doing that. Now, you might be able to go to a listed property and say, hey, I love your house. I don't really have the ability to buy this now. I have this much of a down payment. I would love to buy your house. Would you do rent to own to me? And so they maybe weren't thinking of renting it. They were planning on selling it. They have it listed, but maybe this is an avenue that they would sell. Especially the market has shifted. It was a seller's market for a long time, and we have shifted to a
Mm.
buyer's market a little bit. So you do have room to negotiate and have those discussions and get creative.
Yeah, I have a friend in the Bay Area who did that exact thing where they went to a listed property and she was just in love with the house. It was one that they had passed all the time on their daily walks. And she went to them, but then she wrote a letter. I guess probably handed it. I don't know if she put it like at their front doorstep or I forget that part of the story. But anyway, she got a letter to the owners that basically said, we pass your property all the time. And she's also really into gardening. So she was like, your garden is just so gorgeous. And I would love to keep that going. And I want to teach my daughter. And so she wrote this whole thing and they agreed to it. And they said they were so excited because it was more important to them to pass the house along to somebody who would then be able to, like, to keep it up and take care of it and know all of the love that they put into it. We have friends here, in fact, that had a similar situation to that. I think in that market that you're talking about, some of these folks that maybe aren't even investors, right? This was just their home, but for whatever reason, they're ready to move on and move out, maybe move closer to their children or downsize. That seems to be something that happens quite often where they'd rather have the right people purchase the home versus just somebody purchase it.
Yeah, and so they did rent to own for a while before they
Yes.
actually bought it. Yeah, and again, maybe that ended up being
And they could
yeah,
have sold it at a good price. This is the Bay Area hot
yeah,
market where there's
yeah.
no housing. So it's not like this was an issue for them to sell it and they couldn't find a buyer. It
But
was just the person. They said, "This is
yeah,
more meaningful to us."
yeah. In addition to that, though, there also might have been some getting the cash flow. Maybe there was some tax reasons that worked out. There could have been a lot of different factors
Yep.
that was a great solution in addition to just the fuzzy feeling.
The emotions, which I
Yeah.
think is like technically you're supposed to keep that out of it. But when we're talking
Well,
about a certain market, and these are not investors, these are just this was their home.
yeah.
I think that the emotions really could play in to that both tenant pro and an owner pro.
Yeah. Yeah, that absolutely. And actually just thinking about this made my brain go in a whole nother way. If you're someone that says, I want to get into real estate investing, it's it is tricky to get into, right? You got to come up with the
Yeah.
money, you got to find the property, it all has to work. But maybe if there is somebody selling a house, and maybe it's a house that you see that's been sitting a while or whatever, and you don't have the capital to actually go and buy that house, you could call up that homeowner and say, hey, what if I rent your house on a rent to own? I'm then going to sublease it. I will be the land. I'm going to operate as the landlord, but that allows me to become a real estate investor. All you have to do is collect these rents. And by doing that, now somebody else is going to pay. They're paying that monthly payment. They're paying down your principal, and you're eventually going to be able to buy that house. And now you have that investment property.
That's smart. Yeah.
Honestly, I wish I would
Creative.
have thought of this 20 years ago.
Good
Uh,
for all our listeners.
yeah, that's the first time that idea has ever popped into my head. But it was as you were telling that story, because I get a lot of letters in the mail of people saying, "Oh, I want to buy your house."
Yes.
And I've done coaching with people, and I talk to a lot of people that want to get into real estate investing, but you gotta crack in, and that could be a really creative way. And again, especially with this baby boomer population that have great wealth, tons of assets, and they're transitioning and they're thinking about their future. And this could be a creative way for them to transition. Yeah. Should we talk about tenant pros and cons?
Yeah. Let's dig into that.
So we've been going around this a little bit. Probably the big one there is a portion of rent goes towards principal. So instead of just paying rent, just like if you're paying a mortgage, a portion of that rent is going towards principal. If you can negotiate this, you have a locked in purchase price. And again, prices could go down. If you were doing this right now and you lock in your price, I'd say there's a chance it could dip a little bit. Probably not a ton. I'm not an economist or I don't have a crystal ball, but there is still a lot of demand for housing. So I don't see a big crash or anything, but it could dip a little bit. But, likelihood if you're doing it for a few years, probably be worth more than what you locked in at. You get to test drive the house. You get in there and say, I love the neighborhood or whatever, or you don't. And you get to choose whether you buy it or not. And that's probably worth some amount of money to know that you're buying a house that you actually want to live in.
Oh, yeah. Especially if you're moving from, it could work even if you're moving locally, but especially moving from out of state.
Yeah.
I know when we moved here, we almost went to a section of this town that we live in, city that we live in, that looked really beautiful to us. And there was like but we needed to ask a question. I forget what the question was. So we saw like a water guy. He was working on the side of the road. So Gary pulls over and I don't remember what we asked him. It was probably directions or something. And he said, and then he's, oh, what are you from California? What are you doing here? And we just got to chatting. And then we said, oh, we're looking here at houses. And he's not here. And he said, they lose power here all the time.
Mm.
There's just a number of issues that we're like, oh, so if we had not pulled over and spoken to that water guy, we would have never known that. And again, just moving from out of town. So I could see that being a huge, especially if you're moving to an area that you're not familiar with, a huge reason to want to test drive a house in a neighborhood.
Gives you, yeah. So then another thing is it gives you protection against a market downturn, right? Now, maybe you've done this and you've been paying an extra little bit a month, or maybe you even gave some sort of deposit that's non-refundable. That might be a fraction of what you could have lost if there's a big market dip. So if you lock a house in and let's say it's going to be $400,000 or something, if the market drops by 5%, that few hundred extra dollars you've been spending a month, if you just walk away from that, you're still way ahead than had you just walked up and bought that house. So there is a level of protection there. You might be able to get the home without a large down payment because you're locking in that price, you're paying down principal. And so when you go to purchase that house, you might not need as much. You'll already have that natural equity built into it. And Gary Tice was on here a few episodes ago. He's a mortgage guy. There's a lot of discussion that would go around with that of what does that look like and how would that all play out. So I think discussing that with your loan officer would be smart to see how that equity could help you when you actually get around to purchasing. It allows you time to buy the house, right? So you get to say, all right, this is the house. I want it, but you can continue to save that down payment as you go. Yeah. And then I think maybe I already said this, but locking in that sales price could be a big advantage.
I would add can I add one thing to the pros?
Yeah.
That actually links back to Gary's episode. There are ways that you can look good on paper, right, in order to get a mortgage. But there are lots of people out there who make plenty of money, can easily afford rent or a mortgage, but don't necessarily look good on paper because they're entrepreneurs or they're in the gig economy or whatever the case may be. They maybe were laid off from their job, but like the money itself is not really an issue. Maybe they can't pay full cash for the entire place. So I think that could be a big pro for the tenant as well. There are lots of, especially in the freelance or creative space, folks that fit there who just can't qualify for the amount of mortgage that they would need. So it's a really great way for them to think about being able to buy a house.
Yeah, no, that's great insight, right? It does allow you to, if you need multiple years of tax returns or whatever, you can establish that over this time period. And actually, that was one of the factors why the person that didn't buy the house actually wanted to do the rent to own. He had just started at a new job and he wanted to establish that time period. Now he still decided it wasn't what he wanted, but that was one of the reasons as opposed to just buying it from us. So some of the cons, you're probably going to have a higher monthly out of pocket for the rent. And as you're paying down that principal, it is a give and take with that relationship. If you don't buy it, you're going to lose that extra monthly rent you've been paying. You're not locking in your mortgage rate, which could be a pro, could be a con. When mortgage rates are low, if you're passing on that, then that's a bummer that you're not taking advantage of that. Mortgage rates aren't very low right now, so it might actually serve you to wait, do the rent to own. And if the Fed continues to cut rates, even though, again, Gary explained this, they're not directly tied to that, but they probably will continue to go down some if the Fed does continue to cut short-term rates. It sets a timetable for the purchase. So if you say, all right, I'm going to buy this house in 12 months, 24 months, whatever the agreed upon time period is, that clock does start ticking. And so if at that time period, you're still not in a position to buy. And I think that people being honest with themselves is an important part of this. Everybody says, oh, yeah, 2 years, absolutely, I'll be able to do this. You need to be real honest with yourself, because if you get to the end of that 2 years, it's most likely going to be the best interest of that homeowner to say, sorry, it didn't work out. I'm keeping the extra rent and the down payment. That may not be the case. Maybe they'll renegotiate, whatever. But you do need to understand that when you're locking in that time period, you are locked into that time period. Could lose the down payment if you're walking away, if there is a down payment. If you lock in the price ahead of time and the market dips, and now you're buying the house for more, and obviously that's not a great situation. You might not even be able to get the loan in that situation. So that's a pro and a con, right? Where you have the ability
Yeah.
to walk away, but now you've been paying this money, you're not going to get it. Your tax write-off, when you get a home loan, you get to write off your interest. There's a lot of different tax write-offs you can do. So you're not necessarily benefiting from that. So there is a lot, there is give and take there, and there is pros and cons, and it's got to working with your life strategy. But as we've discussed, there's a few different scenarios where this might be the exact right approach for somebody.
Good stuff. Any other tips that you have for anybody when they're considering rent to own on either side?
I think it's important to really make sure all the paperwork is in place. When I've done it, and I've done it a couple different ways, but generally speaking, I have just a lease in place, and that's what everything is operating under.
Mhm.
And then I've done it where there's just going to be an option to buy at the end with all that money, or I've actually had the purchase and sale agreement written up. It's sitting there, but it just has a 2-year closing. And I've done it both ways, where you have to wait the time period because maybe the seller wants to wait for tax reasons. But I've also had it where you have to buy it within this time period. So if 6 months down the road, the person's now ready to buy, they can execute on that purchase and sale at that time. But I think just making sure that everybody is on the same page, that you're dotting your T, dotting your I's and crossing your T's, and that you do understand what's happening. It might still be worthwhile to get some sort of real estate agent involved to help, or maybe you need a real estate attorney or someone to help pull all that together. And it might be an educational process for both parties.
All right, good stuff. Thank you for sharing your wisdom with us on that, Tony. Good, very good stuff. And if you enjoyed this episode of Drip Trickle Flow Flood, please rate and review on your favorite podcast platform. And with that said, we'll see you next time. Thanks, everybody.